Welcome back to our YouTube channel, The Book Digest. Today, we're digging into a really powerful one, Trend Following by Michael Covel. Now, this isn't just a summary of some trading book. Oh no, Covel makes what is basically a prosecutorial case for a completely different way of thinking about markets, one that honestly challenges some of our most deeply held beliefs. So, let's get right into it.
Right out of the gate, Covel hits us with a really unsettling question, and it's the foundation for his entire argument. What if the most profitable way to trade was also the most psychologically uncomfortable? What if all the things that feel smart in trading, predicting, analyzing, trying to be certain, are actually the very things that guarantee we fail? That's the core challenge here, and it's the big question we're going to tackle.
All right, so here's how we're going to build this case. First, we'll take apart the conventional playbook. Then we'll introduce this radically different philosophy that's all about rules, not predictions. After that, we'll meet the legendary traders who prove this actually works. We'll see how it holds up during total market chaos, and finally, we'll uncover why the ultimate edge in trading might have nothing to do with being the smartest person in the room.
Okay, so first things first, we have to tear down the old way of thinking. Covel argues that, most of us come to the market with a set of beliefs that are just fundamentally flawed. And it all starts with how we even define ourselves when we put our money on the line. So here's the first huge mindset shift you have to make. On one hand, you've got the classic investor. They're all about analyzing a company to figure out its intrinsic value. They buy it, and they wait for the price to catch up to what they think it's worth. But a trend follower, they could not care less about value. They are a pure trader, and they only ask one question: which way is the price moving right now? That's it.
And this really gets to the philosophical heart of it all. See, fundamental analysis, that's all about prediction. It's you trying to be a fortune teller, staring into a crystal ball. Trend following, on the other hand, is purely about reaction. Think of it like a surfer. A surfer doesn't try to predict where the perfect wave will be in an hour. No, they see a wave forming right now, they get on and they ride it. The whole mindset shifts from what I think will happen to what is happening right now.
All right, so we've challenged the old playbook. Now let's start building the new one. And just to be clear, this philosophy isn't based on your gut feelings or some hot tip you heard. Not at all. It's built on a rock-solid foundation of rules, discipline, and just a cold, hard acceptance of what the market is actually doing.
Now this next one, this contrast really challenges our ego. On one side, you have discretionary trading. That's what most people think of. It's governed by your judgment, your intuition, your feelings. It feels smart, right? But the systematic approach says, nope, your judgment is actually the problem. It replaces all those chaotic feelings with a predefined set of rules: when to get in, when to get out, how much to risk, and it demands you follow them without any deviation, no questions asked.
So yeah, this is really the core of the whole strategy. A systematic approach isn't just, a different style. It's a tool. It's a tool designed specifically to overcome our own worst instincts. You can think of it like a machine for making rational decisions in an environment, the market, that is basically built to make us act irrationally. And Covel himself puts it so bluntly here. He says it removes from the decision-making process precisely the human cognitive and emotional apparatus shown to be the greatest source of trading error. Think about that. He's saying our own brain, with all its emotional baggage and biases, is the single biggest liability we have in trading. A system is designed to literally short-circuit that flawed human wiring. It's like a firewall between our irrational impulses and our money.
Okay, so now it's time for the evidence. Covel doesn't just give us a theory and leave it at that. He brings in the witnesses. He profiles these legendary traders who have used this exact philosophy to make billions, not just for a year or two, but over decades. This proves it's not just some abstract academic idea. First up is David Harding. He's a physicist out of Cambridge, and he founded the massive hedge fund Winton Group. And his whole approach was to treat trading not like some kind of art, but like a scientific problem that needed to be solved with rigor.
So what does his career prove? Well, it shows that this rigorous, evidence-based approach works across all kinds of different decades and market conditions. And what's really crucial here is that it proves the success comes from the system itself, not from the magical gut feel of some star trader.
Next up, we have Ed Seykota. And honestly, Covel talks about this guy with something close to reverence. Seykota was a true pioneer. We're talking about one of the first guys to develop a computerized trading system way back in the 1970s. His performance is absolutely legendary. But really, it's his philosophical clarity that's the most important takeaway here.
And it's captured perfectly in this idea. He said the market is a game of probabilities to be engaged through superior rules and superior psychology. Think about that. He's not saying the market is a puzzle you can solve. He's saying it's a game of odds. And you don't win by being smarter than everyone else. You win by having better rules and, just as importantly, the psychological discipline to actually stick to them.
Okay, so the theory sounds good, and the traders who use it are the real deal. But here comes the ultimate stress test, right? How does this whole strategy actually perform when the rest of the world is completely falling apart?
Just look at this timeline of pure financial panic. We're talking about events that were considered impossible black swans: the Asian contagion, the LTCM crisis, the dot-com bust, and of course the 2008 Great Recession. For most investors, these were moments of absolute catastrophe. But for trend followers, these were massive, massive opportunities. While everyone else was hitting the panic button, their systems were just calmly capitalizing on the powerful downward trends.
But you gotta ask, why does this happen so consistently? It is absolutely not a coincidence. It's because trend followers only react to price. That means they are naturally positioned in the direction a trend is developing, whether it's up or down, long before it becomes a full-blown crisis in the news. They aren't predicting the crash. They're just riding the price wave that happens to lead right into it.
Okay, so we've seen what trend following is, we've met the people who do it, and we've seen how it performs under pressure. Now for the final piece of the puzzle, the closing argument in our case. Why does it work so consistently? And the answer, maybe surprisingly, isn't found in some complex financial theory. It's found in human psychology.
This all goes back to the groundbreaking work of psychologists like Kahneman and Tversky. They proved that we humans are just wired with these predictable biases. Like loss aversion, we hate losing way more than we enjoy winning, so we hold on to our losing trades way too long. Or anchoring, we get stuck on the first piece of information, like the price we bought at. Then there's classic overconfidence. We all think we're better at predicting the future than we actually are. And of course, herding. We just follow the crowd, even when it's heading off a cliff. Trend-following systems are built from the ground up to do the exact opposite of every single one of these irrational impulses.
And this is where it kind of gets personal. I mean, just take a second and be honest with yourself. Which of those biases drives your financial decisions? Because recognizing these little flaws in our own thinking, that's the first real step to understanding why a systematic approach can be so incredibly powerful.
So, that brings us to the final verdict. The true edge in the market isn't about finding some secret piece of information nobody else has. The edge is behavioral, and that's why it's so durable, because it's based on human nature, which, let's face it, doesn't really change. As long as people are driven by fear and greed, trends are going to exist, period.
But look, Covel is very clear that this is not easy, not by a long shot. If you want to adopt this strategy, you have to accept some really, really difficult truths. For starters, you're going to be wrong most of the time. You'll go through long, frustrating periods where it feels like nothing is working. You have to completely give up the ego trip of trying to predict things. And you have to finally accept the market for what it is, a game of probabilities, not a puzzle you can solve.
And that brings us to the ultimate challenge of this entire book. It really asks us to redefine what winning even looks like. See, it's not about being right on every trade. It's about having the discipline to be wrong and wrong and wrong again so that you're still in the game for those rare, massive winning trends that make it all worthwhile. So the final question is, could you do it? Could you accept being wrong most of the time to ultimately win in the end? It's a really profound question to leave you with.